I'm never going to be able to read the charts. I'm looking at the pictures here. It's the photos. Look at all these people. They all came to see me. Yep, and I'm not there. Y'all can hear me. Good morning. Sorry about the late open. I had a, well, let's not get into too much detail. It just I wasn't feeling well. And that's one of the reasons why I couldn't make it down there to Orlando, this event. But I'm going to soldier on, and looks like the pre-market has a really good setup, but it's nonetheless a trading range, okay? So just be careful here. Now, this is also bull, what we call it, flat. It's a bull flag, okay? Bull flags make these double bottoms, okay? After a channel going up and down. Now, the only problem with this channel is that it's quite large. It's more than 50 bars. So I don't know if this breakout is going to yield anything good. So be careful with that. But it is a variation of a bull flag. Okay. Actually, bull flags are now 4. I used to say 3, but now you can also get this kind of like a triangle-ish, but I kind of put all of that in together in one, but this is really 3, and this is like a variation sometimes like that, but these are just small time frames. It happens very quickly in a smaller, maybe like a few bars, but these are basically your bull flag. So this is the one, right? So we go like this. You get a wedge and go like this. You get a pullback, and then you go in a channel, come back to that pullback, and then you buy again. So it looks like we got that double bottom. All right, so I know these people are very consistently profitable. They are doing great. Oh my gosh, look at this, is amazing. Completely missed this. I'm so proud of everybody in this room. I really am. They're so dedicated. Us, on the other hand. Market is open, everybody. All right, let's begin. Got a really nice setup. They're trying to break around here. We tested October 5th high. You can see that there is a moving average that market is trying to reach. We're above last week's range high, and we are hovering above this level. So it looks like we're trying to get back up here, but just be careful. There's also a spike, pullback, and channel setup on the hourly. I don't know if you guys see it. Spike. This is your pullback and a channel. Okay. It might have made 1, 2, 3 push, or it's trying to make the 3rd push overshoot. It could come back down, so just be careful. Okay, but it is the one thing I didn't have time to do, so now you're going to see how I do my Globex chart. This is my Globex charts, okay? So it's missing some things, but that's all right. So what I'm going to do, take that, find my new Globex range. The Globex high is right there. We're testing right now. That's the, it's actually a narrow, small range, so we're going to break out of this range quickly. We might even break out on both sides, okay? That's Globex low. So it is, let's see, 1, 2, 3, 4 bars. That's high. Okay, and that's good. Oh, not you. That's good. Oh, not you. So that is midnight open. So that is midnight open. Bulls are trying to break out, but we don't have a breakout just yet. So go. And then I measured the Asia session. So you guys are getting a quick course right there. So here we go. That's my Globex chart with all my levels. They're trying to reach here. They're trying to reach there. Something is off here. Oh, because I need to get rid of that. Here we go. That's better. Okay. You see that Asia failed to break out in London Open at 2 o'clock in the morning, 2 a.m. Eastern time, and then came right back down. Again, failed twice, so now the bulls are taking over. So bulls got a chance to get up here, but first they're going to take profit right here. They just tested the first target, but that's shallow target. This is where they're trying to go and possibly continue up here. All right, so we had a yesterday we had a wedge that we broke out, which I was expecting this to happen. I really wanted price to actually stay above this magnet October 5th, which is right here, okay, so on the daily, on the weekly, and it kind of failed. You could see no consecutive bull bars after bar 70, and it's also the end of day. So bar 70 marks around 70, 71 marks around actually 72, just before the 3:30 p.m. Eastern time. So last half hour gets closer to the end of the day price action. You sometimes get reversals at that time or breakouts, but it was kind of bummer because I was really hoping that we would continue to get back up to 38.30 area and maybe even 38.40. My target was 38.52, and that's coming from the hourly chart. It's right there. Okay, so on the daily, market is going sideways but bullish. Now, this is a trading range. We have a much bigger trading range, but it's really a channel. So we broke above this trend line, which I said we need to watch. Okay, that was a shallow. And we came back and tested and then went right back up. So magnet and magnets. So bulls are trying to get back to September 21st, okay, highs, and there is a important area. Okay, look what just happened here. Market used this area as support and then broke it. Then resistance, and broke above it. So it's keep coming back to this price point, and it happens to be 3,900. And then it's support again, and bounces pretty strong, but we're in a trading range, upper level. And then we break again, we test the June low. We could not break out of the June low successfully, and we made a double bottom. Now we're testing the neckline. If we continue to go up, okay, we're probably going to come back to that neckline breakout test point, but bulls are looking for now a possible cup and handle maybe, or double bottom into breakout, or maybe a measured move. But they're still looking for a double top at some kind of EMA. okay, not EMA, I'm sorry, moving average. This isn't an EMA, this is SMA. This is, red line is the 50 SMA. Blue is 100, 150, and 200. So they're still looking for some kind of a double top, come back down and keep us in some kind of a trading range. But that trading range can be a lower high, okay, and a bear flag. So that's what they're trying to set. And bulls are trying to get back up to this trend line, to these moving averages, certain highs. That level I posted right there. Okay, so it's kind of important. And also I want to test something. I want to take a look at. So that's December. So that's January. So this year, 2022, let's measure the entire range. And let's take a look at where the 50% of this range is. Right there. That also happens to be a magnet. So I'm going to mark that. If you take the entire year range, so you have the 33%, 50, so 66. So if you divide it into 3 sections, these are pullback. And if we get above it, then we go here. Now that pullback could reject, and we can also reverse from there. It happens to be right around where that trend line and 2 moving averages are. So we know I don't need to keep this up here, but that's not 21. That's 22. Oh, it looks like I have it. But that's wrong. Oh, that was, I don't really care about that. Let's just leave it there. Apparently, I also found a 2021 midpoint, but that doesn't make sense. So, but it's up there, so we could still go there. But this is what I'm interested. Okay. All right. Made a mistake there. That's better. All right. This one we already tested. No longer interested. There are probably sellers above that October 5th area. High of yesterday is being tested. It's always a resistance, right? Bulls need to close above it to become bullish. Now, can they continue this run? I don't know. Right now, with bar 1, they kind of get rejected, but it's not the end, right? So they're looking for some kind of a double bottom, maybe at the EMA, get back above the high of yesterday. If they do break the opening range, we now have an opening range, and it's even expanding yesterday, towards yesterday. So if we do get above high of yesterday, we could still become bullish. All right, so we do have a trend line. You can also get your trend line there, and that makes it a wedge with October 5th high. They're trying to break above high of yesterday and squeeze out. Market is trying to set up to have a bullish day yet again, but it's not yet decided. Let's see, the first try failed, made a double top with bar 70, and this is the second try. We're stalling there, and you can see the Globex, although nope, I'm not behind. So the Globex range breakout, it really needs a bull bar closing outside the range. Okay. Now, I do have a resistance here, so we're running some stops above it, and that's problematic. And we also have, you see this right here, that's kind of a this could be a trap right here, trapping the sellers. Okay, so if you're trying to sell thinking these are highs and I can fade these highs, this is a trap. okay, in a way. So bulls know that, and they're trying to exploit that, and they're trying to at least get up to these levels. So at least if you want to sell this, at least look for confirmation. Wait for this bar to actually close inside the Globex range, because it may not close below the Globex high. And if it doesn't, you could be stuck in something called you're trying to fade, and it may not fade at all. It would fade your account. You do not want that. So just wait, okay? You'll know if this is becoming some kind of a rejection at the highs and the bulls are failing to break out at the highs, and then we're going to get a swing short at least to the midnight open and then down to Asia mid-level. Once we start to close bars below midnight open and Asia mid, which is this dotted gold line, we become bearish. That means we go down and try to test the Globex low, maybe even break out from there, but we don't have that. We have what seems like a bull flag, and they're trying to squeeze out of it, even on the smaller time frame. And the 1 hour chart has a target right up there. And you can see that hourly is trying to reach places that we talked about. So let's see. But for the small time frame, 5-minute chart, we are struggling at the high of yesterday. But you see, what I've taught you guys last week, you see this wick, small wick, and another wick. The third bar, this is bar 1, this is bar 2, this is bar 3. Some limit orders are selling. This third bar, it needs to close bearish in order for you to even entertain to sell it. So this bar needs to close bearish for you to sell it. It's not even bearish. You cannot sell this. All right, so now we have a Globex, okay? Breakout, and we're going to my chart. You see why I said fading would be deadly? I love it. Spam me all you want. Tim. Hopefully they're not. Oh, that's 2 M's, sorry. Should be 1. Should be your name right there. This is great. I love the photos. I'm crying inside. I had a really rough night, guys. I had a surgery, and it's nothing major. It's just everybody goes through these things. But I don't know if I'm actually healing well. I ran out of I'm actually going back to doctors today to ask for more painkillers because I ran out of them. And it's not really feeling like it's healing. So I'm not feeling it. That's why I couldn't start. And that's one of the reasons why I couldn't get down there to Orlando. And the doctor said to me, baby, it's best that you don't fly. So I'm loving these pictures. I might take a pause. I'm just not feeling my 100% today, but I'm going to try to keep you guys in the right side of the market at best, okay? So now you can see that we have a breakout and a 3-bar measured move. Let's see if we can actually get that. So your conservative target, that's what I would go for, but you can put your, because that's today's range, okay? That's, you can take that as your target, or you could just use the bar 78, since that would be a actual place to put your stop. So that would be your extended target. We were actually going to do, I was going to get on the camera and like seem like 10 minutes at the event, and I hope that won't happen. So I'm really good in front of a camera. All right, so there you go. It's paying off. Bulls are trying to reach up here. Now the conservative target for today's range breakout, 38.4075, 38.41-ish. All right, so we're almost there. So you do want to get paid there, okay? Or where I marked right here on the Globex chart is your target. Or if you want to hold a runner into the target on 1 hour chart, be my guest. But you do need to pay yourself. Thank you, guys. You need to pay yourself. Tim Strout has a much bigger range, which I agree. And he's measuring the Globex session, and that's it. So 46.25, I have 52, 50, or yeah, just about. So I'm on the same level on the 5-minute chart, which is 38.45. He's got 46.25. And then the extended is 52, 50 area. Or if you want to hold, because we're probably going to test that 50 SMA on the daily chart. And the 50 SMA is at 38.76. Okay, so we could still continue to push this. Let's see if we can push a little bit. But you see right here, as we come to these make-believe targets that I marked on the Globex, you have to pay yourself and leave a runner. Same as on the, okay, on the hourly. That's why we stole there right away. But we should push a little bit further. So the conservative target already met, and that's where we are in a way. Might be they might be front running, but it's too early to front run. So and why is it stopping here? Why are they front running? Why the bulls are taking profit here? Again, I'm going to repeat. Globex chart, make believe levels. I put them there for a reason, because I know some machines will respect those levels, even though not everyone does, which is fine. But that's where they pay themselves, and then they might leave a runner. Once the, you know, those profit takers get out of the way, we could continue to go up. But sometimes we collapse. So I have to pay attention. As I watch it, you know, year after year, you kind of get a feel of why things happen the way they happen. But if you actually measure, let me measure something from here to there. That's 5. So from here to there, we made only 36. So we have a little bit more room to go up to 40 points. Okay, and bulls, they don't need to stop here. They can go additional 10 more points, 5 to 10. They have to make 6 points to make additional 10 points. So if they take the price up here and close a bull bar, they can go another 10 points above the 40 points. So we do have a room for bulls to flex their muscles a little bit more. For those of you who are not in, I'm going to take a screenshot. And then I will post it in here. So we should get to these levels. Here's the 40 point. That's a big trend move since the low of 78, bar 78 from yesterday. That's where I measured from the swing. Now, first I measured this pullback. You do not want a pullback no more than 10 points, because if it is, you can't really, you have to measure from a new bullish run up, because anything more than 6 points bears or 5 points bears will take profit at 10 points. That kind of weakens the bull move. So you have to start measuring from reliable area. But since this pullback with bar 79 and 80 and 81 didn't really do anything, and it wasn't really significant, I continue to, you know, measure from the 78 low, and that gives me 10, 40 points. We're in the zone right now. So 40 points starts at 39, goes up to 41. We already test. So good job. Good job, bulls, but they can continue 10 more ATR is 10 points and above. So here we go. We hit my first target. We're about to hit my second target, measured move on the 5-minute. And Tim's Globex measured move next, 46.25, and then the 52.50. I'm gonna say 52.50 or 52.75 is right there on the hourly, and then your daily is 38.76. So 2 of my targets met. Excellent. Can we push another 10 points? We need to close a bull bar at the 5 or 6 point, somewhere here, to get to the 10 point, and then the count would begin again, and I would start to look for a brand new 40 point from that level. Okay, so they're still pushing. This is trend from the open. Okay, this is trend from the open. So you go to your Brooks Encyclopedia and search. Let me see if I can actually find. So I go to Encyclopedia, there's T. I'm going to go to T and see if I can find it there. Trend from the open. There they are. All of those charts actually marked with that keyword set. So this is a bear one. Maybe I could say a little bit bull trend. That's better. Bull trend from, that's not bull trend. Oh, that's bull trap. Maybe bull trend came after that, but there you go. So there's one. That's the same chart, I think. Yep. So this one has a lot more annotation. So it's a bear trap, and I explained why that's a bear trap. Because they're bears trapped here. They try to sell once, they try to sell twice, but that happened down here pre-market. Okay, so you kind of get the idea that when an Asia range fails, okay, to break out, and that's the second try, and the bulls are going to take over. When you see something like this, and you can even trade this on a 1-minute chart if you wanted to, okay, you look for a bar like this. You see a bar like that, just buy it. Stick your stop right there. You go 1 to 1, 2 to 1, 3 to 1, 4 to 1. So actually, yeah, so that's what you would do. Now, that's also another trap. They try to trap you at the Globex high. They made it look like it's fading. I don't know if you guys remember that mile-long upper wick, and I said, don't fade this. All you're going to fade is your account. You do not want to fade this. And that worked out fine. Yeah, the news. Thank you for that reminder, Bard. Today is Tuesday. Consumer confidence at 10 o'clock coming up, less than 3 minutes. Richmond Fed Manufacturing Index. Although, who cares about that? Consumer confidence is the one. And that's a big market mover. So we have up. You see right there, that's a high 1. And that is right there. First pullback, second pullback, that's high 2. Okay. Even high 3. Okay. I'm going to go over some of the bar counting, charts with you at the end of this session. Some people are sending me messages. It's not that difficult. One thing that you guys need to remember where you're counting, okay? That's the number one step that people forget when they start the count and they can't make sense of it. It's the pullbacks. Pullback. In a pullback, that's what you're counting, okay? So if the bullish move, the pullbacks are bearish bars, bear bars. If the market is bullish, okay, you don't want to sell, but you're trying to sell kind of a trap, okay? How many times bears are trying to sell? They need to make like a 2-legged move down to get trapped so you can look for a high 1, high 2 to buy, right? That's what you're counting basically. So like here, that bear bar is the first pullback, and then this continues. They actually both the high 1. This bar, the second bull bar, went above that bar's high. That makes it high 1. And second time they tried here, that's high 2. Okay, bears failed. Now the bulls are taking over, and high 3. and actually making a breakout spike pullback channel up. So can we continue to go up? Well, the news can be a catalyst for a reversal, but we are bullish, so I'm going to get rid of this target because we already met those targets. We're going up to the 10 point. So look, from the 40 point, we need a 6 point. That's a 5.5. Okay, I need a solid 6 point. But those who actually bought the close, they went for another 5 point and made it after 40 point. Now, if the bull's actually able to close a bull bar right around here, they can continue to go up to, okay, 10 point and then 15 and 20. But if they cannot do that, this is profit taken. And then you would look for a first entry short from the highs and a second entry short, okay, for bears. But until you see that, you do not sell, okay? Because it looks like selling. Again, those new traders, they're going to be like, let's fade this because we are so up high from the EMA. That's got to pull back. Says who? You don't know that. I don't know that. It can pull back. You could be right, but you only get the rights to say, hey, I was right after the fact that the price action happened. At this point, you don't know. So you can't say that this is fading, it's selling, this is going to come down. Your guess is as good as my guess, 50-50. You're just right now spinning the dice. That's all you're doing. Because this something that looks like bearish suddenly closes up here at the 6 point, can get a 10 point, 15 point, 20 point, yet another 40 point to the upside. Then I would like to see your face, okay? But in order to sell this, you first need to see a bears close a bar, okay, at least breach that bar's low to get that low one from the highs. Then it could go up again, and then it fails to make a new high. You would look for a low 2. Then I would say, okay, now they might be coming down. But even then, you have a gap here. The buyers might be waiting here. Okay, and then you also need to measure, like from this high where they start to sell, or from that body, are they making a 6 point to make a 10 point? Well, they're at the 6 point, but that doesn't mean that they're going to be able to get to the 10 point. Why? Because that bar hasn't closed at the 6 point and below. So if the bears are not able to close a bar from highs 5 point, that means they're not able to scalp 5 point. That means that's too shallow. They can't do anything because this is trying to go higher. So you need to see bears at least collecting 5 point. That's the start of a swing, right? And if they're showing you that they cannot close a bear bar at this level, I call it 6, you can't use 5. Doesn't matter. That means they're not going to get to the 10 point. That means they're not going to get, after bouncing, they're not going to get to the 15 point. After bouncing, they're not going to get to the 20 point. So you need to see a bear bar closing here first, right there, and then continuation into a 10 point here. You can quickly scalp that, but I would wait for a second entry. All right, so we met the Globex measured move also. We met my targets, and an extension target is right there. We did not meet that. Now, for bulls, this right here is actually 1-to-1, okay, of Asia. Although, I'm sorry, that's 2-to-1. This is 1-to-1. This is 2-to-1 Asia. So the bulls might be trying to get to the 2-to-1 Asia target right up there. So they're going to have to do a lot better. Because it's news now, I like to stay out of it. I'm not reading, bars that are reasonable at this point. It's 10 o'clock. It's 3 minutes into the first news bar. It could do so many things. It could just come down here and then go right back up, or it could go right back up to my targets very quickly and then come back down. I don't want to be stuck in that. So I'm going to wait 3 bars, 15 minutes, to get a solid direction. We squeezed out of this, so get rid of that. Squeezed out of this, so get rid of that. I'm watching bar 7, the news bar. I'm not broadcasting in stereo. L special. He just said, he goes, I have both speakers, but you are mono, my dear. I don't know how to fix it. Is it same for everyone? Is it same for everyone? Do I sound mono? I mean, I'm not 100% myself today, but I don't think that has anything to do. It could be just you, GM. Try to smack that speaker that it's not working. Smacking works. Smack it upside down. It's you. It's not me, it's you. It could be. I don't know why. I really don't know. All right, so you see that they close the bar beyond 6 point. That's pressure. That's a trend for bears, small trend. Now, they're at the 10 point. They're going to take profit. You're going to see a lower wick bounce a little bit. But again, this is the second news bar. So volatility is going to be a little bit different, but doesn't matter. When the machines do visit these 10 point, 15 point, 20 point, they're going to take profit. And you're going to see, okay, lower wick if you're selling. That's it right there. Look at the bar 8. Never proves me wrong. Now, that was a quick profit. Okay, now where we're going. If that continues, they can close that bar below the 10 point. The next is 14 to 15 point. I'm going to mark the 15 point, but you can take profit 1 point above. That's what I do generally, because I don't want to be scrambling while it's bouncing to the upside. Because it's news bar and it's volatility, it's in place, so it's pushing. But you saw that lower wick, it bounced a little bit. Okay. Then from that high, we can even go to 19 to 20 point area and take profit. Now, this is the way that I measure. L measures it different way. So I'm going to show you. Okay. But it's the same thing. Basically, he looks to see where the stop order sellers are. Like they start to sell basically here. Okay. Or underneath bar 7. He looks for, say you sold bar 6 or bar 7. Let's take the bar 6, okay? He's looking for an initial 5-point scalp. He got it. And according to his, okay, measurement, if I got this right, those 5-point scalpers are taking profit. But if you actually measure from the pivot point, my scalpers also taking profit at the 10 point, which is right there. They just breached a little bit, okay? They just breached under. Or you could say, but haven't you said that the 15 point starts at 13 point? Yes. So if 14 is the smack in the middle, look, they actually tag the next zone. Next zone is a 15 point zone, begins at 13 point. Okay, so they did tag it, so now they're bouncing. So all of these zone, okay, scalpers are taking profit with that lower wick on bar 8. But if they do close this bar somewhere here, they could try to continue to 10 point, 9 point, or 10 point area. But it could first go up a little bit and then give you a second sell. I don't know. At this point, you're taking profit, and that's what that lower wick is at the 5-point area. Everybody's taking profit right here. And this is scalping. And for the swing bulls, okay, since they have a trend from the open, what they're doing is they're looking for, okay, pullback bars, and they want to buy the high one. So 7 and 8 are pullback, right? So we need a bar that goes above, okay, and then comes back and tries to make the second leg, which is the second pullback in this bull trend. Then you're going to look for another bull bar that you can buy. But right now, we don't have that set up, and the bears are still selling underneath bar 6 or bar 7 or the close of bar 7, and they're trying to scalp minimum 5 points. And they're hoping they can get to 10 point. Oh, sorry, guys. I didn't realize that I was on mute. Let me explain that again. So I'm trying to explain here that I'm looking for a signal and a trigger bar. I said earlier, I don't know if you guys heard me, but this bar, okay, so this is a pullback, okay, one leg pullback in a bull move. So I'm looking for bull move, first leg, pullback, and a second leg. Sometimes a second leg becomes a signal and a trigger bar and becomes a trap. So I'm looking for a high one. I already got the high one. And then bears moved the market down. Price came down and made a new low, breached the bar 8 low. Now that signal bar became a trigger bar. It's a one nice neat package, okay? So bears are getting trapped there. And if you're having a hard time seeing that this could be the second leg all at once, just lower it to 2 or 3 minute chart and see if you can see a 2-legged move there and right there. So, and not only it's a 2-minute, 2-legged move, bears are trapped. So the bulls are buying if you have a hard time reading the 5-minute. Okay, so there you have it. And so basically this is bar 9 is a signal bar for going above bar 8 and then comes down and makes a new low. That's now is pullback and a second leg all in a nice neat package, and then traps the bears, becomes, and then goes and closes up high, but it's not that high. It would have been better if that body actually closed above bar 8, okay? But still, it is a high close, and it's actually now a trigger bar. So therefore, immediately, okay, the bulls took their stop order, dropped it 1 tick above that bar, and they're looking for an initial 1-point scalp. So if you actually bought 1 tick above that bar 9, you get filled at 43.25. You scalp 44.25, but the price needs to go to 44.50. They did. Not only that, 45.25 was 2 point. In order to get a 2 point, it needed to go to 45.50. Price did. It actually go even 1 tick above. So those who actually waited for that setup, they got a really nice combo, signal and a trigger all in one bar, which is bar 9, scalp 2 points right there. But that's still the first entry. Some might be waiting for a second entry long. Sorry about the audio issue. So hopefully you guys heard me now. I don't know, I wasn't trying to fix the mono versus stereo. It just happened naturally. All right, so what happened here? Well, the bears only could get a 5 point, and that's it. So that's the first entry long. Generally, the first entry long doesn't really go higher, so bulls might be looking for a second entry long. But nonetheless, it gave you 2 points, which was great, I think. Now, if this is all a pullback now, can we get an actual second leg? Yes. So bears might be actually trying to put a second leg here. But to me, bar 9 was the second leg and a pullback all at the same time. Now, if bears actually fail to close a, bear bar, they're going to lose their chance here. But that means we really need to go and close above somewhere here. We need set of bull bars. Bulls want to test the bar 7 high and break out, but bears might try to get a leg down. We do have a double bottom and a micro double bottom here. So if you look at this example right here, I think this was a cleaner chart, it doesn't matter. Right there, so we have that second leg move, first leg and a second leg. First pullback, high 1. Second pullback happens to be also trap and then high 2. We're getting something similar there, okay? So if you start to see the highs are breaching and the bulls are coming in, they might try to go for a stronger leg like that. That's because they're trying to reach that area where I marked on the hourly. And then the exhaustion, bulls need to close on the Globex right here. But I'm going to make that gray because it's not, if they fail, Okay, if they fail, we can swing down, and the bears are going to try to fade that. Failure to get above this level, that's why it's grayed out. We would never get back up here, okay? But they will try. Right now, you see this line that we're above it? That's good news, all right? So we're above 1-to-1. They're trying to get a 2-to-1. But they need to show us that they can breach the highs, like this Globex high right there. Not Globex high, I'm sorry, the bar that actually above the Globex high and made a new high. So that means we need to breach that high and keep going up. What if we fail? Well, if we do fail, then let's take a look at what would be the reason. Did we make a wedge from yesterday? Do we have some kind of a wedge? Well, they had a wedge, and then we squeezed out of it, okay? So now it's no more. We have a new breakout. So that means count might have began here, fresh. 1, pull back. 2, pull back. We might even go further and make a high. So that's why I'm saying I think bulls might try to go higher, a lot higher. So plus there is a gap. You can measure the gap and get a measured move. The way that I measure it, from there to there, we have not tested that continuation bull target for that gap, the bull gap that we have. I have 3 bars, 3 bull bars. So I'm measuring that gap and looking for continuation into 54.25, which happens to be above this level. But I need bulls to do a lot better here, okay? So what does this mean? They should not allow bears actually make a double top and sell this and test the midpoint of bar 8 or 9. So this bar needs to close on its high, or bullish, even if it's a 1-tick body, it needs to continue 3 bull bars. Then the bulls, especially if they get the bar 11 close bullish, they're going to try to get to the high of day and make a new high. Okay, so you do have, now that I zoomed in, I'm not accurate with my measurements, but that's it. Accurate with my measurements, but that's it. $38, $54, $50, they seem to be trying to get right there. How many people are in the event right now, the conference room? Because we have 182 people minus me, 181 people in the trade room. I wonder who got the bigger number. I'm just joking. Do you think they have 100 people in that conference room right now? I bet we beat them. I bet the trade room is higher. Anyway, so let's see. But that number is low because of the conference, obviously, so should have a lot more. What is BRN? What? I don't know if I remember that abbreviation. Oh, big round numbers, thank you. Oh yeah, I mean, of course, 3,800, 3,900, sure. But anything in between, I don't care. Some people do look at those. I look at the numbers end with 5, like 38.55, 38.45, 65, 75, 25, 15, 05. If I'm scalping, I look for rejections at those levels. I used to know a trader, I mean, he just put in so many lines on his chart that for every number, like price level ended with 0, come on. Every 10 points, really, you're looking for something to do. That's exactly how ES actually moves. That's just too much. You don't need to do that. And especially if you add those lines to your chart, you're slowing down your chart, especially in Ninja. You don't need. Keep a clean chart. But the big round numbers, yeah, is 3,900, 3,800, and somewhere here, 3,900. Okay, so we could, you see that right there, September 6th low. That's right around 3,900, and it happens to be a breakout test area. So they're trying to probably get there. But right now, we need bulls to break out of this prior high and get to my continuation bull target. Now, where can this fail? It could fail right here. But if we do close the bar above this, we're going right up there. Wait, what do you mean? BR, are you in the conference right now? And you're probably situated right behind Tim's shoulder. Are you stalking his screen? This is YouTube. All right, let's see. We're still making our way. We just tested the prior high. We get a nice higher low, and that's the second entry long. If you can see bar 11, you see how it breached, came down, and then we just went right above, and then now we're taking out. But we didn't officially take out the prior high. We need to close a bull bar. As soon as this bar closes, swing bulls will move that stop from here to here, okay? Because this is going to become the official new higher low for them to move the stop from here. If it's here, now it's going to move underneath bar 9. But they're looking for that bull close above bar 7 high. Okay, look, we just tested my extension, which is a half, right? So if this is 100%, this is 150. So this is 1 to 1, that's 1.5. Okay, we need a bull close above there on the higher time frame. We're reaching the 52.75 area. And if I actually measured, so there, I'm wrong there, see. Makes a difference on a 1 hour chart if you don't snap it to the edges. Okay, so 52.50. The difference was 1 tick. That's okay. Okay, we do have a bull close. And that's a breakout bar. Bulls need a breakout follow through. And if some bears sold here and stuck here, they're probably selling again. Okay? But I think it's too little too late. Let's see how this bar 13 closes, because you see this area, this is a small trading range. Anytime you get a first breakout, first bull or bear breakout after, sideways bars, it's always going to get some kind of, what was the word I'm looking for? It's going to get challenged, and it may not get a follow through right away, meaning buy to close. So you should always expect price to wanting to go back into the trading range, and that's what the 13 is trying to do. Okay, and you can also say, well, that's one reason, and the next reason that she's been saying, pay attention to this line. This is why you don't just jump in with a breakout. It's a good close, but you have to expect a pullback. And you can also say breakout level, that's where it's probably going to pull back. There might be limit order buyers underneath bar 12, okay? Plus the bar 11 close and the bar 12 gapped up slightly. They did close that gap with that wick, but that there's still a gap there. So when it comes down there, their buyer's probably there, and they're going to buy and bounce a little bit, even if it rejects completely. So therefore, there are probably buyers there, and they're not going to want to let a huge bear bar close on its low because they got a successful breakout here. But let's just wait. So if I see this many overlapping bars, I'm not going to jump in with that first rather weak breakout. It's still closed on its high and above, but still many bulls who now move their stops here, they're irked and they're like, let's buy this, let's buy there, let's buy here, even let's buy closer to here and prevent that stop to be hit. But if bears close this bar on its low, you see how it's like going up now a little bit? That's because the first defense in that bar close gap area between the close of 11 and the open of 12. And I did say that there are probably buyers waiting there and they're going to buy. Those are the limit order buyers that Al talks about. Say that there are probably buyers waiting there and they're going to buy. Those are the limit order buyers that Al talks about. We're not getting our clean breakouts like the one that I showed here. This is a really nice breakout. We're not getting that. But this bar hasn't closed, so we don't know yet. We're getting this nonsense. You see, that's a breakout right there. And a bear bar tries to come down, but the buyers buy it again, and we go, but we don't go too far. So could that be us? Possible. So that spike pullback and channel, mark that double bottom, because if market starts to distribute and not able to go higher and starts to move underneath the EMA, that's where we're going to pull right there. Here's another option. Wow, they went dark in there. How cozy. Charts. Oh my gosh. Who's in charge of the lights? Brad? Brad, dim the lights. Let's make this cozy. You can sense the jealousy in my tone, right? I am jealous. It's like they're soaking up all that information. Yeah, I am a little jelly. All right, so here, look at that. We broke out of this morning range, this right here, yesterday's, whatever. Take this as yesterday's, and then we broke out, right? But they had a problem here, and we are having that problem as well. So, and they didn't go too far. So the breakout was not that exciting. And then we immediately came back to this area once again. Now, I don't know if this is going to be us, but this breakout is not getting continuation. It actually failed now. Bar 12 closed on its mid. It's trying to get continuation for bears, a complete rejection. If bulls are seeing a double top already and a neckline, they might want to come back down and test that neckline. That's a problem because there's a ton of stops sitting there. And now the first defense, we found buyers right there. Second defense is probably going to be right here, okay? And bulls are going to try to stop. But again, what is this, guys? What is happening here? Well, I said we had a 1, 2, 3 wedge, and then we broke out again, so the count begins. So here's first pullback. We're on the second pullback. We're probably going to make our third push up. So I don't believe this is going to be a full reversal unless we take out that midpoint of this double top right there. So if we do come down here, breach, look for a pullback and another leg down. So you're looking for a 2 legs down. Then a bear flag and then sell. Okay, then I'll believe bears are completely, ruined hopes and dreams of higher prices, but I don't have that yet. So all I know that these guys, these swing guys have stops here. They're going to try to defend this area, and this could be just a second pullback in a wedge formation. So we start to get bull bars, we will make new highs, and I do have a continuation target, but I don't know if we would get there. This isn't a measured move per se, it is, but it really, you're measuring a gap here, so it's a nice to have on the chart. It's not like the one-to-one measured move target. I like to get to these levels very quickly, not in 10 to 20 bars. You can remove this. See, nice pullback, two-legged pullback, continues to go up, 20 bar gap. That's a gap up. We didn't gap up, so that's not really us. That's actually becoming a strong bear body now. But I'm going to wait 20 more seconds. Let's just wait. That's the second defense underneath 10 and 11. Small support there. Let's see if the bulls are going to step up here. Because if they don't, look where we're getting rejected. That's not good for the bulls. And I did say, even though I'm going to, dim it down, but it's an important area. It's an extension for bulls. All right, so that's a strong bull bear close. And that's basically a second sell. I'm going to get rid of this. That's a second sell entry, and there might be sellers, okay, trying to sell the close of 14 or one tick underneath, looking for a 1 point scalp at least, and then test of EMA or the midpoint. But that's a support right there, okay, right here. And there's a potential of making a third push. So if you are selling this, you have to keep in mind, back of your mind, you're selling into a smaller defense area. Is this worth? So maybe wait for a pullback and try to sell the second leg to the EMA, because as the bear bars get closer to the EMA, they're not going to just sell it right away, right? And they're going to look for a pullback before selling. It could be just too low to sell. So that's the pullback. That's why I didn't want to sell it. It's just the defense area. The bulls are going to try to defend as much as possible. Now, those who sold one tick underneath 14, they're still hoping that the price would go with a second leg down. So their stops are here probably, okay? They already got entered into their short. They might be regretting for not entering maybe up here with a limit order. So this is where I would have entered. So I would have waited for price to go and test that bear bars low and then give me a much better entry. Because if the bears are going to fail here, I would still make money. But entering right here underneath 14 against this area, breakout, support again, it's kind of dangerous. I would say yes, it's a limit order market also, but it's not the best limit order market. Now, why is that? It's a limit order market because we failed to break out and we came right back to the range. But we have a little bit of void here and a little bit of void here. So that makes it okay and ideal for high 1, high 2, maybe even high 3 setups. Since we have a new high here, okay, I would start to count again, okay, because this is kind of a leg that broke out and made a new high. Now we're in the pullback again. So this is first pullback by bears. I don't have a high 1 yet, okay, if you're counting from here. Some will say, oh no, we didn't make a new low, so I don't need to worry about that. This would be my first entry. Now I'm looking for a second entry. That's fine. That's a variation. As long as you know that this is a bull market, and you have to, in the back of your head, you have to also think, if bears are trying to sell the second entry, how come they're not accelerating? They're not doing a good job. That's because you're in a bull market, okay? So bears are only, what you are in with the bear move is a pullback in the bull market. So you just have to weigh your options to see, okay, who's winning. Now, bears always want to make a two-legged move to some key price level, which is EMA. So that's what they're trying to do. They got their first leg, and they're trying to get the second leg. Or they might say, hey, this was our first leg and this is our second leg and we're getting trapped here. So bar 15 made a new low and closed high. So they'll probably buy stop orders one tick above. See how they're buying one tick above 15? Because they're also bulls are trying to get the third push up to make a wedge. Some bears still want to put a second leg down, but as we close more bull bars and higher, they're just not going to sell. There might be some sellers above 14, limit order sellers, because 2 bear bars. So if they sold here and got stuck underneath bar 14, which they did with one tick, and then they're going to want to sell up here to break even. So we might get something looking like a second leg per se for this move down, but if they get trapped, we're going to make a new high. I'm just asking Tim to make videos. I'm just bugging him while his poor guy has, okay, you know what, I'm not going to bother you anymore, Tim. I'll go away. I was asking him to make some videos for us, you know, members and Al, and these are really good photos. Oh, I love them. Poor Tim is like, go away. I'm trying to watch the presentation. And here I am like, do this and do that. And I'm giving him like step-by-step instructions. All right, so you see how if you're counting here, that's first entry long, second entry long, maybe even third entry long. Or if you're counting, okay, so we made a new high, that's the first entry long. And let's see if they're going to actually sell here. But I think they're losing grip, the bears, because we're going to try to get that third push up, like I said. Now, bulls are trying to close above. Okay, right here we have a stick sandwich, which I call strong bull bars, encapsulating some kind of a strong bear bar, and then they close. It's like an unofficial IOI, but it's not really official, but I still use them. And then if this third body closes up here, chances are we're going to break out. Swing trade and scalps. Oh, that looks really good, and I can actually see it. All right, so we actually made a new high, okay, and just like that, but that bar hasn't closed yet, so hopefully the bulls are going to get a decent, official, much proper, okay, breakout. But that's still a third push. That's still valid. And my only problem is that stick sandwich right here for the bulls, okay, to feast on, hasn't really closed that 15-minute bar. And there's still 8 minutes, and hopefully that bar will close bullish. So we're making our way to the hourly target, 52.50. I like to see more continuation to the upside. Okay, I don't like this at all, just so you guys know, because bears, what the bears are trying to do, they're trying to make it look like it's a breakout. They're trying to get a higher high. It could collapse. Be careful here, okay? Anytime I see something like this, that's bullish, which we got, okay? But anytime I see like this, okay, that could be a trap for bulls, and then we could end up coming down, okay? What they do is they sell into these stops and then swing it down because we have a higher low and it's struggling to break out. Here, let's see, where was that? See, this came down and they trapped the bears, and they bought into their stops and broke out. See, this is the continuation breakout. So now, can we have at these highs, because we've been pushing pretty high and we made that spike pullback and 3 push top, we could end up reversing. So I'm also wary of that. But I still do think that the bulls are still trying to continue this last hour's strong bull bar. They're testing above that bar. Generally, you want to see the last hour's high being tested, but there is the target is so close by. It's not that far at all. Just needs to go and get it. Like, we were literally 1.5 points away from the target. So I'm going to wait a little bit. I'm more interested in the 55, 38, 55. What do you mean 37.50 resistance? 37? I think you meant to say 37, 38.50. Manja. Yeah, 30. I would go for 55. Bulls are going to try to probably get there, but they need to close above that trend line. See, they failed to break out now, but they're trying. 55, they're going to try to get closer to the 55. S&P pays attention to price levels, ends with 5. I'm just worried that the bulls are going to be trapped. But there's a gap here now. We might continue. You see how it's closer to the 5, 38, 54, 50. Let's see what the bulls are going to do here. I'd like to see push. So in 3 minutes, if this combo, 3-bar combo closes the 3rd bar on its high, we could get a quick breach. We might even go up to the 59.60 area. Now, 38.60 would be your round number, okay? That's the one that we might actually go and test after testing 55. But let's see. Some bears want to trap the bulls here. They see this bar 17 high as a trap. Okay, the body did not close above the prior high. So they're trying to now trap the bulls and then come down. It's also a kind of an expanding triangle. Okay, so if the bulls are still here at the apex holding, we could still go back up. But if they do break that apex, then that's it. The bulls are trapped. We could end up coming down here. Now you're going to say, well, 38.50 was my round number, and we are getting trapped here. So you could say that's your round number. I don't know anything about the 50 or the 60 or the 70, anything that ends with 0. But this was always a problem, this line right there. Okay, so it could be just a coincidence, all right? But if Tim says that he might have some kind of technique that, I can't really speak of, all I know is that S&P machines pay attention to the 5s, the 45, the 35, the 25. If it's coming from up above, it's going to bounce. If it's coming from down above, it's going to bounce. So what happened here? Bears are trying to now go and run these stops. If the bulls move those stops underneath here, this would be a bad place to put a stop right there. But I think the bulls are going to try again. So I'm watching this bar 1 minute and where it's going to close. If that closes bearish, then you have bear, bull, bear. Then you have a bear stick sandwich. And if this body now closes bearish, bears can continue to swing this down. But I don't know. This, I'm going to get rid of now. That's the third push, also wedge. So the wedge sellers are wanting to come down and test these and eventually right there. They're trying to get a wedge reversal, and they're also trying to get a 18 bar reversal. But let's see how the bar 18 closes. So this is what I was worried about, whether it's a round number or even number, like 55. This is what I was worried about. When you get this, okay, and you get this high, suddenly you end up getting a trap because there is a expanding triangle. But expanding triangle is also a bull flag. It's a variation. So trap because there is a expanding triangle. But expanding triangle is also a bull flag. It's a variation. So I am, I don't know if I want to sell this, but bar 18, if they do close a strong bear bar, then that's it. That's the reversal. They're going to try to come down and test the bar 15 low at least. But that bullish stick sandwich is now gone. We have rejection yet again. However, now bears are not doing well either. So this ends up being a just wedge, and the bears are trying to sell it. But how strong are they? You know, if they do sell, because bar 18 is a strong bear bar, they have to close this bar bearish and then come down and test this low at least. And that would give them a second leg down, maybe to the EMA, maybe somewhere here as the EMA catches up. So I don't know. I don't know if I want to sell it, because I think there's still bull targets above, and I'm not really keen on selling this. Okay, so here we go. Bulls want to squeeze right out of this, possibly, or bears want to get their second leg and trap everyone with the second leg down here, and the bulls would take over. Market makers can make things look bearish, okay, but in reality, they're not. So what they do is bar 18, everybody knows bar 18 is a reversal time, or everybody thinks that's it, because that's Joe Schmo hears from the guy next door. So they all know, oh, 18 bar, 19 bar is a follow through. This market is reversing. It could be very well. Market makers know that too. So what they do is they throw money out, you know, into the market with bar 18, maybe even get a 19 follow through, only to make you sell into the support, okay, and then trap you, and it just goes right up. So they might even trap you a lot earlier. They might keep that gap to the EMA open, and then now you're stuck selling something that you heard over and over but never traded or paid attention when it actually fails. So and I don't have an inside-outside combos. All I'm seeing is that bulls are buying the pullbacks, okay, and they might just squeeze out of this one more time. Well, you would start counting from bar 4, so it's only been 14, 15 bars, right? So 20 bar, we don't have a 20 bar gap yet. So we could still make a new high and come back down. By the time we reach it, it could be bar 30, bar 40, if we make new highs and new breakout. Now, bears want a lower high here, okay? They want to see a lower high And what they're doing is, if you are a wedge trader, right? So which bar is the bar that made the last push? This bar. So we already broke down with bar 18. They're going back and retesting because they want to sell again. Okay, so bulls want to close inside this area, go to the 50% of this box, okay, and then go test the high and break out and completely undo this wedge sell. Bears, on the other hand, this was their first sell. They're going back and retesting. They need to close another bear bar. If they do that, then we could actually break out from here and go test here and go test here. But until then, you can't really sell. All we're doing right now is we're pulling back to that. Last bar was the highest of the third push in that wedge, which is bar 17. So you wait, because if you sell early, that means you didn't wait for the pullback to that box. And then even if you waited for the pullback, but you sold anyway right at the bottom of that box without waiting for bar to close, that bar could close right up here and then squeeze out. You sold here. Now what? What are you going to do? This wedge is not selling. You either take a loss and cry about it, or you're going to have to sell up here, maybe like a 5-10 points above, in hopes of breaking even. And that is pain, because you're going to sit there and the market makers know that they got you, okay? Because they threw money in the market trying to trap you with that bar 18, making it look like it's an 18 bar reversal. But in essence, Rose knows better. Do not sell that. There's no continuation with bar 19. We're breaching into the reversal box. Where is the reversal? This may not be selling at all. You're going to get these all the time, every time. No one explained it to me like this. I had to sit there, okay, go through the content that Elle created, make sense of what I read and watched in the videos on actual charts, and I start to put together my own methods, okay, that in line with Elle's to make life easier for me. So then I started to filter out the trades. As I filter out the trades, I realized I was no longer opening and click happy person, okay, that opening trades, you know, here and there, and not losing anymore, because first I'm eliminating opening trades, so I'm sidelined, and the second I'm watching and filtering and going with my criteria. That made me actually open much better and accurate trades that way. You know, you can watch 100 different courses, but if you're not able to apply what you learned, that means you're not seeing what you learned. We're just about to hit our target, and on the daily, 38.70, 650 is the 50 SMA that we're trying to reach. So bulls are still pushing, like I said. This is not done. Okay, here we go. Hourly chart, 52.25. Did we just hit my target, 52.50? We might have, I don't know. Let's see. Yeah. Okay. So if you hold, if you held this, you basically got your first swing target here. Now bulls want to, they're going to be profit taking here. They're going to get back up here. This is their target. Okay. That's where they're trying to go. But there will be some profit taking here, so be careful there. We have another breakout now. So what happened to the wedge? You got trapped right there. They sold the close. They sold here. I said, be careful there. Don't sell. And now we have a new high. And this wedge died, and we just squeezed out of it. So this could be maybe the fourth high. 1, 2, 3, fourth push. And we're meeting some kind of objective. But on the Globex, we still have a target. That's 2-to-1 Asia. If you actually measure Asia, You don't need these fib levels. I'm just leaving it there. You can also do this. That's 1 to 1, right? Just about 2 to 1 right there, give or take. You just mark your chart. You don't have to have these levels. So bulls need, we might pull back for scalpers or limit order bulls. They might be looking for a pullback to 51 area, 38.51. ATR is 5.5 points. So at about 5 points, that's 56. Add another two ticks, 56.50. We might still go and tag, but first you gotta wait because this is a breakout. It's also a push, could be an exhaustion, I don't know, but I think because it's a breakout, pullback buyers might be there. We have been overlapping, okay? So now we have an outside-inside combo, don't we? I mean, we didn't have any like that. We actually, nope, that was an unofficial one. Bulls actually bought it. And so we now have an official one if bar 21 closes inside bar 20. I didn't buy automatically at the 38.51 yet. I'm waiting for, they're buying, they're actually, it's breaching the level, the breakout level right there. So I want to wait a little bit because if bears are trying to trap the bulls here, it's because they're taking profit. Like I said, this is a profit area on the hourly, so I said they're going to probably take profit. But the goal is to close a bull bar above this level and continue to go up. So I'm going to wait for this bar to go above 51. There might be some buyers wanting to buy here, but I'm going to wait for this bar to close. If they close it above 51, see, it's already stalling there, so I think they're trying to buy. So ATR is now 6.25. So just say 6 points. So that's, we can end up going to 57. That's 1 to 1 ATR. Or you can go for half the ATR and scalp and see if you get a runner. So that will be 3 points. Somewhere around 54 maybe. Let's see if we can bounce. Or you can just wait for this bar to close, so it would actually give you some kind of an indication that it wants to close above the breakout point. And then the buyers could show up and buy the close of this bar 21. We have an 18 bar breakout for bulls here. So let's see if the bulls actually want to continue this further up. This right here, bar 21, is a profit-taking bar at a certain level on a higher time frame. Well, hold on. So if you actually, you said that you bought bar 16 and got stopped out below bar 18. Now, what did I say up here? I said there's 2 bars and 2 legs. In a way, 2 legs, okay? 2 bear bars. So what does this mean? They're probably sellers above that high, right? So if you're buying above bar 16 and looking for, you should have at least scalped a little bit, okay? So if you bought here 1 tick above, you got filled at 48.25, 49.25, or 50.25. You would have get a 2 point at least, okay? You would have scalped that, and your stop would be down here. Now, you said that you are stopped out under bar 18. Now, why did you get stopped out? Your stop should be down here. I don't understand your trade. So you bought here, bar 18 wasn't even there. So why was your stop there? Why did you move it? Your stop should have been here at least. And I said bar 18 could be a trap by market makers, and they did trap right there. So the market is going up. So you should not have, maybe I'm missing something there. you should have stayed in your long with a runner as your stop is down here. But you should have banked 2 points right there. They're always natural sellers, just like here, 1, 2 legs and a continuation. They're going to sell above there. And that's what they did. They might even sell 2 points above, 1 point, whatever. They're going to sell 5 points above. They're going to sell it. But they're not getting any continuation with bar 18. Where's the second bear bar? Bulls came in. So what you could have done, you could have put, as soon as this bar closed 19, put a buy stop order. Buy that. Now you have more contracts because this is trying to go up. More contracts because this is trying to go up. All right, so some bulls will scalp here as they bought at 51. ATR is now 550, so 2.5 points they would grab, or 3 points, say. Some will hold about 5 points and try to scalp the 56 or 57, 56, 56, 50 area. But I don't like the fact that this bar 21 closed very low and bearish. It should have been a continuation. It's a breakout pullback, so therefore bulls bought the close, and look what happened. See how I was looking at that breakout level? Like that area right there, and I said just about 51. You could have said 51.25, doesn't matter. They came down, they closed the bear bar underneath that breakout test. I did not like it. But regardless, okay, they bought it anyway. They bought the close. Now I said they're probably going to try to get half the ATR. They scalped it. So I measured it from 51, just a little bit below. You could have also said, this is the breakout. Okay, fine. Then they bought it anyway. I said they're probably going to buy that bear bars, okay, close, because many bulls might be stuck up here. So they're going to want to try to get back up. Now, when can this sell? If you're still long and you want to get out, look at this high, lower high, high. This one's 1 tick above, so limit order sellers might be there. If this bar closes bearish, they're going to try to sell with a second leg down. That's when I would get out of my long, okay? But I have no reason to get out right now. They just scalped probably half the ATR. Yep, and the total is just about 5 points, so they could still get to the 38.56. I can't really sell this yet. This is still bullish. This is breakout, pullback, and they're trying to buy, and they're showing you they started to buy the close of a bear bar. So that means it's still trying to get to the 56 and try to make a new high of day. Now, last minute, if the bulls are not able to close a bull bar, okay, on its high in about 16 seconds, and this bar somehow closes bearish, bear body, okay, down here, they're going to sell. Say this closed bullish, but it didn't close, bearish, but they fail to make a new high, and the next bar closes bearish, they will sell that. But right now, it's a stick sandwich for bulls to feast on, so they're probably going to try to get to the 56. 55, sellers already sold. You see how 55 bounced right there? So the bulls now trying to get above 55 and go to new highs. Now, 22 did not close where I wanted to close. That's weak, but still a high close, okay? But it didn't do what I wanted to do. So now I'm nervous because look at it. Bar 23 is, oh, we have a ledge now. If it closes like this, we have a ledge. All right, ledge in a long time. Now, I don't know where bar 23 is going to close. But you see how we could not get above this? I thought this was 1 tick above. I'm sorry, it's not. But now, if the bears actually close it down here, now they're going to get a chance to sell this. So if you're long, just stay long, okay? But if you do see this bar close down here, you're going to have to get out. You're going to have to make a decision because it can still sell. Because bulls failed. They totally failed. They should have went above. So now, if the bulls actually now close this bar bullish, then the buying can continue because you got an inside bar. You got an outside bar and you got an inside bar. Outside bar, inside bar. Now the bulls close, they couldn't test here. Bears want to come down and test that inside bar's low. So they're given a fight here. Bulls could not close above it to start the breakout. So we're still inside. But this is still bullish now. That's why I said don't get out of your longs, just wait. Because it's still trying to go and break above those insides bar, okay, with a bull bar at least, or go and break above the outside bar. Down the bulls are going to try to go and test first this target, then either you can go for 150, but this is my actual target. Now, we do have a trap here. Bulls need that bull close outside. So if we do close above the 55 threshold, we're going to keep going. If we fail, that means we have not broken out of the outside bar's range yet. But this is, to me, bullish now. If they do close it bearish, because we have inside, bears want to test now here and there and close a bear body, come down and test here and maybe break down and get to these targets and 1-to-1. But if this bar closes even here underneath the high of the outside bar, that's still bullish. The next bar could actually break out and get the first shallow target. So that's why I said don't try to sell something here that is not yet bearish. 22, I was a little bit nervous there, but 22 closed like that. They're trying to buy. Now, there are buy stop orders, one tick above 20, probably waiting, and they got activated with 21. They want to go and test this. They haven't made money yet because they're buying too early. I wait for a solid bull body closing above that 100% right there, above that high. Once I get that, I can either buy it or I can wait for a pullback, but it's so close. They generally get this target. This is the one I'm interested, and then 1-to-1 right there. Those who bought with stop order one tick above 20, because this is an outside, inside, and now it's a little bit bullish, they haven't made, 1 point. They need to make a 1 point. So if they bought at 55, price needed to go to 56.25 to give them a 1 point. They have not made that yet. That's it right there. Price needs to get up here. But if they, instead of buying with a stop order there, they see bar 22 close like that, they can lower that stop order right above 22. They get filled there. Now they probably made their 1 point. So you get filled at 54.25, okay? Price needs to go to 55.50 to give you 1 point. They could not make a point. That's not a solid point, so they're still struggling. But the good news, bulls close the bull bar outside of the outside bar or mother bar, I call bar 20. So now they're trying to get not only that 1 point, price needs to hit, listen, you get filled at 54.25. It needs to hit 55.50 to give you 1 point, and then continuation into the shallow target 38.57. Let's see that bulls can do this. But the breakout is weak. You see the breakout? So I said, even if the breakout comes in, expect a pullback. It's pulling back with that bar. But it's still a solid breakout. But because it's a 3-bar range, 20, 21, 22, it's a 3-bar range and it's overlapping bars. Bar 23, it's a weak breakout. That's why you're getting that deep pullback, okay? But really the goal is to actually close a bull bar and get continuation. And they probably will do that. Well, let's see. Now, why is this also happening? What did I say about 38.55? Every time price is coming under, below, 55, any number, price ends with 5. I'm not talking about 38.55, 25, 75. No quarters, just a solid 55. Okay? They get resistance at the 55 or 45 or 65. So bears are going to try to sell twice. This is their second time trying to sell. They already, bears already sell that, bounce to the 55, made money. Now bulls are trying to close. I think they might have closed. I don't know. Let me see. That's 55. Nope, they could not close above 55. They closed the 23 right at the 55. So they're getting their second sell opportunity. But if these bears can no longer sell, and once we close above that 55, we're going higher, possibly to 59, maybe even 61. So all of this happens. I marry all these things that I know, and I look at the conditions, and I kind of know why things are happening. But you can stick to one thing. There's a breakout, and it is weak. So like any other breakout, pulls back, breakout, pulls back, breakout. What is going on with the bulls? Their breakouts are weak, and we don't have gaps in between these. They make a new high and then come back down. It's tough. So you have to expect these pullbacks. Maybe they're making more money with a pullback. Maybe that's what you need to do. So I'm going to wait for bar 24 to close. If they do close it on its high and above the breakout point, which is bar 20 high, that's it. Bulls are going to hit 40s. They're going to go and hit 40s levels. They're going to try to test them. But if they do close suddenly all the way down under here, bears are going to try to take out these inside bar lows and test the mother bar or outside bar's low. So I don't need to worry about that right now, because if you bought above 22 or one tick above the outside bar, your stop can be either here or you can put it underneath the inside bar if you don't want to lose too much and expect continuation to the upside. It's just that market is showing you, yes, we are breaking out and making new highs, but look at the highs. Okay, this one was okay, but even that pulled back a lot below the pullback, the breakout point. It's telling you that we're not that strong. It's because they already met the target. And on the higher time frame, the fight is to close an hourly bar above this level to get back up here. And on another higher time frame, which is 15-minute chart, bulls are still trying to reach here. But it's not that strong. So what happened now? No continuation. Breakout 23. Terrible continuation. But did the bulls who actually bought one tick above 22 made their money? Yes. 55.50. All they needed to hit 55.50 to make a 1-point scalp. Did they make it? Yes, with bar 25 high. So anybody who bought the pullback and lowered the buy stop above 22 from here, they made money. Now, those who bought above 20, let's see, they would get filled at 55, right? Price needed to hit 56.25. They still haven't made money. So they are now, we need to make this, point. But where is the continuation? 23 breakout, pullback, still no continuation. I don't like it when mother bars or outside bars are breached and you cannot make a point. That kind of gives me an idea. I'm not able to make a point with the stop order, which I should. And maybe this is not a good small pullback bull trend. Maybe this just hit some exhaustion area, and it's by not giving me that 1 point that I should get easily is a sign of something. Now, late entry, what would you do? Well, if this outside bar breakout is not continuing into even a shallow target like that one, pullback would be 50%. So you would wait for price to come down to 50%, all right, and see if there are actually buyers there. And what you can do is, say you entered here, okay, one tick above, which was 55. Let me get rid of this for a minute. Say you entered at 55, right there, and then you go buy, where's the 50%? 38. So somewhere here you buy again. Price comes down here, you enter. This is where you break even. And if price turns back down again, you're no longer stuck. Did you see what I did there? So this is your, okay, this is your outside bar range. That's the 50% right there. So now you entered here and you're stuck. One tick above 55. You're going to have to either wait for price to come down to the 50% and enter here. This will become your break even. However, you're waiting. You're stuck. You're waiting. Price to come down here. Okay? It never comes down. Instead, it goes up. Then that's good. You're making money. You don't have to break even. You don't have to add. That's good. Right? Price is fixing itself. Then you just get rid of it. But you have to be prepared, okay, to buy here to break even. And now you don't have to. Why? Because we just hit. We still haven't hit the 56.25. We need 56.25 for these guys to make money. It's hitting 56. That's 1 point above buying 20. That's it. Everybody made money. Everybody who bought one tick above the outside bar, betting on higher prices, made money. Now their runner is running towards this shallow target, and they want to look for a bull close above, and then they want to see if the price can pull up here, and then to 1-to-1 target right there. But you see how hard it was to make that 1 point? That should tell you something. See, it hit the 50, what is it? Did it hit 56.25? It hit 56. Hold on, I'm wrong. We haven't even made a 1 point. That was 55. That's it. It needs to hit right there, 56.25. These bulls have not made 1 point yet. They're still struggling. It's tough. It shouldn't be this tough. It should be very easy. If market is bullish, it should be easy to get that 1 point. No one, not only they're lowering their buy stops above an inside bar they already made. Not only they're making with that 1 point, they should be easily be making 1 point with an outside bar. All right, so they're trying again. That's it. One more, two. Oh, nope, still not. Still, it hasn't hit the 56.25. Still nothing. If I was in this trade, and I'm wondering what is happening, I would start to think, is this really going places? How bullish is this? This is not very bullish. Maybe you just get out and then wait for a bull bar closing above 123%, and then you look to buy. That would be your confirmation the bull trend is still intact. But here, if you're getting antsy and you're not getting that 1 point at 56.25, okay, maybe I need to wrap things around and take my marbles and, dolls and go away for a while at least. Because what if it just collapsed right back down? That's what I would start to think. Okay, that's what they made it look nice. They got their 1 point, and now they're hoping the price is going to go right up here. They're trying to now get their 2 point at right there. Now, why is this suddenly, so bad? Why is it like 2 points, 3 points, 1 point? Well, look at the ATR. Well, ATR came down significantly. We don't have that much of a volatility in the market anymore. It'll come back around Thursday, Friday, especially Friday. Being the end of month, we're gonna start seeing 10 point, 15, 20 point bars again. But right now we're dealing with that. But still, targets met. So you can look at the ATR and say, well, I can start to panic because I'm not making a 1 point, or I'm not making a 1 point because these bar ranges are only about 4 points, okay? So I have to be patient because bears are not getting continuations, but the bulls are getting continuations. It's just going to get there. It's just going to be painful. So maybe I should sit tight instead of panicking and getting out. So if you were to sit tight because ATR is small, but market is still bullish, you would get your target right there. Now, if they do close this bar above here, this is where we're going. I know I'm dissecting this like, I'm not going to say it. That would be insensitive to say. And all the PETA, supporters are going to come after me. But anyway, so I'm dissecting this. I know you guys are getting tired of hearing me the same thing, but I want you to see what I'm seeing, okay? Why things are happening. What am I looking at? Why am I getting, nervous because of that 1 point? How lousy it is to wait for a 1 point. But if you cannot make a 1 point in a bull market, that should give you, heebie-jeebies or BGs or whatever you call it. I mean, I would be like, okay, I don't know, maybe I should just take that 3 ticks and get out. And then you look at the ATR and like, oh, I see why this is happening. It's just because the bar ranges are so small, so I just have to be patient. That's all. Nobody said trading is easy, especially futures, especially S&P. If you're committed to trade S&P, learn it inside out, okay? Somebody will tell you after the fact that all of this, look, we're about to hit my target at 60.25, I would say 1 tick below, I would take profit, okay? 1 tick below. If it says 40, that's 25. So I'm going to delete all this. Somebody will tell you, okay, and I love when they do that. Don't you see this spike pull back and channel? I was trying to trade it when the channel was down here, not up there. So my grandmother can rise from, her grave and say, oh, dear child, we're going up. But that's not the point. The point is to understand real time what is happening and what's not happening. Anyone can read a chart after the fact that 81 bars are printed, okay? But trying to stay in your long and seeing this as a channel kind of overshooting, and then you're at the high of that channel, you have every right to get antsy there and nervous because you're overshooting. And this bullish trend is not that significant. And now what happened? Oh, look at that. Globex target met. I never moved that arrow, and I said, we're going there. Now, how did we get there? Let's take a look, right? Let me make this a little bit bigger. What am I looking at? Why do I have these lines on my charts, especially on the Globex? Because I use them as thresholds, as boundaries. I've got a bull bar closed 1 tick above or 2 tick above this faded line. That's actually 150%, okay? That's 1.5. It's a threshold. In order to get the 2-to-1 target, we need bull bars closing. But it's also a profit-taking area. So these bulls are taking some kind of a profit. Now we have almost the same size of a bear bar, okay? The same size of a bull bar and a bear bar closing on its low. That's a problem there. So, but if you wanted to sell this, where is the continuation bear bar? It's not there. So the bulls go out and test again. Okay. Now they failed again, but now they close it. Just buy that. We now have a second close. It's not a consecutive close like I wish it was. Because we didn't get a consecutive close after this bar, we go into this nonsense, okay? So, but we did get another close regardless, so you can buy that, or you can buy one tick above with a stop order and expect continuation. You would make money right at that level. That level is 200%, which is 2 to 1, I think. So that's 1 to 1. Yeah, 2 to 1 Asia. All right, so that target met. Now, what do we have? A similar concept. Look, we have this hour closed above this level. This hour is giving a fight, and it's trying to close above. So that would give you 2 consecutive bull bars, but there's still 47 minutes. If the bears actually end up closing down here, we could come down and test the midpoint of this hour, okay? So just gotta watch, okay? We have now continuation, spike, pullback, maybe a channel on the hourly. Daily is still trying to get to my target, which we only are from, let me see, just about 9 points away. 9 points is nothing. So we could just break out and get to that 50 SMA. There's a congestion area right there that the bull's also trying to reach. Sellers might be there. Now some will say, well, this is a small pullback bull trend. Yes, it is. It is now, look, but it's still breaking out bullish, but it's a very painful one. Okay, so the bulls are still buying if the pullbacks are 2 or 1 bar, 2 bar bear bar with a high close. That's weak, so they're going to buy it. Now, even a strong bear close, they bought it, and then there were buyers above the highs. And then 1 bar, they bought it, another bar, they bought it, another breakout, another bear bar. So we are in a small pullback bull trend. It's still trying to get to places. So you can still stay in your long. I'm gonna take a break, and I'm gonna end this sharp because I have to go to places. So I'm gonna end this at noon. I'll be back probably very late in the afternoon. See if I can actually catch end of day. What do you mean? Well, thank you for the flowers. Well, the Globex high on 15-minute, I don't see it on mine. You're not bothering me. You don't have to say that. Where did you get that Globex high on 15-minute? Right there. And that's the Globex low. So basically these lines are Globex high and low. You can also measure, so we stole there because Globex made its 1 to 1, but we're still breaking out. Now, could they be, okay, so they're trying to reach the 1.5 and possibly 2 to 1. That's if you measure the Globex range. But that 74 is closer to my target 50 SMA on the 1 hour. 50 SMA is at 76.50 area or 76 area. So it's only about point and a half away. So that would be the 2 to 1. Okay, good. These targets, these levels, they don't have to be there. You could just keep it clean. All you have to do, instead of the Globex session, many institutions do pay attention to Asia breakout. Like Asia tried to break out from the downside. Okay, so if I actually measure the Asia range, look what happened. They failed. They couldn't even break down, right? But if I actually measure with fib levels, the way that I put my template together, look where the Asia failed. Look, here, let me get rid of this. Let me get rid of that. The breakout was, Asia did break out, the bears, but look, they could not close consecutive bear bars to continue down to those targets. Look, second time, this level. That's why I keep these level important, you know. So now they go up. The US Globex, okay, the US session is breaking out the Globex high. So now Asia wants to go test the first shallow target and not failed like the bears did down here. They closed, they tested, but they couldn't close above it, but immediately they start to buy again, so that's breakout. Here's second target, but this is 1-to-1 Asia. You don't have to have it. You could just mark 1-to-1, 2-to-1, so and so. Okay? I'm just leaving it there so you can see it clearly. So, we just reached 2-to-1. Asia 2-to-1. It says 300 because Ninja Trader, when you're putting your fib levels, it counts accurately to the one side and it adds 100 onto the next side. It's not like, you know, it's weird. I don't even know how to explain it. So basically, if it starts to count from 100, you're adding, you know, 6180, that's 16180. It has to go to 200. That 200 ends up being 100, actually 1-to-1. Then the 300 becomes 2-to-1. Get it? Thank you. I'm sorry. It's painful to explain. I don't know how to explain, but it's just the way that their programmers programmed it. Some applications adds equal, you know. I kind of get why they're doing it that way, but it's just, you know. All right, so now it's still a small pullback bull trend, but look at the pullback bar 27. It's a doji, and it's an inside bar also. So 26 is an outside bar, inside bar. So we have now another II, okay, and we're just there. We have a ledge. We had a ledge. Did we have a ledge earlier? No, that ledge is gone. Now we have a 3-bar ledge, which we tested above it. Okay, if this bar closes here, we can now come down suddenly. Look, this bar actually tested that ledge high. So now, is this too high to buy? Let's think about that. You're going to have to wait for this bar to close because we're still inside. There's some kind of a breakout, but the bar hasn't closed. You can't really judge it. Last second, it could go and close outside. That would be a breakout. Now, bears want to come down and test first this inside bar low and close a bear bar. That would be an official breakout within the range of actual outside bar. Then they would want to continue come down and take that low, which is the first inside bar low. If they do, that means they're trying to break out from the downside of the outside bar. But do you see a bear bar? No. Bulls are still buying with stop orders above these highs. Or they see an inside bar and this next bar after that actually closed high, they're going to buy it anyway. They're going to try to grab a 1 point and then leave a runner. So this is still bullish. But it can give in any second now, okay? Because we have a ledge and we tested the ledge with 1 tick or 2 tick. I don't know. Is it? That bar hasn't closed. No matter what I say, is not going to be accurate 2 seconds later. So let's wait for this bar to close. All I know is that they have tested above that ledge. 59.75. Yep, 1 tick above. If this is good enough for bulls and they can no longer break out above the outside bar 26, and last second, there's 1 minute and about 50 seconds left, this bar collapses down here, you're going to know that the bears are going to want to take out these lows. If it's a solid bull breakout, what are you going to do? Basically, you look for a bull body breaking above the 26, and that's your shallow target. They're still reaching. So you would look for a bullish move, continue up. Bulls are trying to get now, where are they trying to go? Another 10 points if they're trying to get out of this. If they do close a bull bar here, outside of the range of outside bar, they're going to try to close a bar at least above 38.61, and they're going to try to get the 38.65. Or at least to here. But first they need to close the bar. They need to break out. Could this be exhaustion? Do you see an exhaustion bar on the 5-minute chart? No, I don't. On the 15-minute chart, the Globex chart, this bar is not bigger than this bar, so there's no exhaustion yet. I don't see it. Okay, failed bull bar. It failed to break out, right? So what does this mean? But it didn't close bearish. Can I sell this? You need a bear bar, right? You need a bear bar to get some kind of confirmation if you can sell. Do you have one? No. So you can't really sell. This can still break out. Oh, yeah, I mean, you're absolutely right. I don't know if he's talking to me, but yeah, I mean, we're also looking at the 20 bar, and we already talked about, if you start the count from, bar 4, right? So you have 24 bars, 5 and 6. So you have more than 20 bar, and it's still going, right? But it may not come down and test the EMA all the way, I don't know, maybe bar 40, 42, or 32, I don't know. This can still go on and on and on. It will eventually come down to the EMA. Right now, it's a small pullback bull trend. It's still going. So I'm not going to sell into EMA unless they show me some kind of a trap. Is bar 29 high a trap? Possible, because there's a ledge there. 1, 2, 3 ledge. Breakout failed. Bears want to come down and test this 2 inside bars lows. Okay, they're going to have to first close a bear bar. They have to give me something if they want to show me that they can make a 2 legs down into the EMA. Otherwise, we may not pull back all the way to 35, 40, bar 40, I don't know. Breakouts are bad. I mean, it's just, bulls are really not there, right? So where is there's no negative gaps. Maybe there is some. Okay, so there's a negative gap here. But if the bears close here like they did here, actually we have a negative gap here too. It's barely there, but it's there. So we do have a negative gap there. We do have a negative gap here. So this is still bullish. Bears need to show me that they want to close some of these negative gaps and they want to get the 2 legs down. Then that's fine. Maybe we can come down around bar 35, 40 to the EMA. But I'm going to wait. So here's a first candidate, okay, a bear bar. But there is still 1 minute and 55 seconds, so I have to wait. Okay, you see how they're now trying to take out that inside bar 28? That's the second inside bar, basically II. If they do close this body, then that means they're going to try now bar 27 low. And if they do close below the midpoint of outside bar, which is marked right there, you know where they're trying to go. They're trying to go test now the outside bars low. And then they're going to try to break out. First target, second target happens to be right at the EMA. We would get our bounce at the EMA, 20 bar gap. But first they need to close this bar Now, did they take out the bar 27? Oh, yeah. Well, it didn't go one tick below. So if there are stops underneath that inside bar, everybody's shivering with fear. They're like, oh, okay, maybe it's time for us to get out because this might be pulling back. But bulls can still keep the gap to EMA. They can get you out and make it look like bearish only to go back high again, and the gap is maintained all the way to the bar 40 or 50 before we even touch the EMA. So you need continuation for bar 30. Some bulls actually exited out underneath bar 27. So you could say, let me get rid of this. You can have it on your chart. Some will say, well, I sold there because I knew market was going to come down. I'm looking for a 5-point scalp. Okay. That means you're betting on market to come down to here. That happens to be below the outside bar 26. That means you're looking for a bear bar close, which is a breakout. Then you would look for continuation into the EMA. But what if the bears cannot make 5 points? If in a bull market, bears are selling underneath these bars or selling into these bulls taking profit early on, but they're still not able to get a 5-point, what does that tell you? It's not that bearish. That means bulls are still trying to maintain the gap to the EMA open. So that 5-point scalp is a big deal. We will test the EMA. I mean, I can always say, hey, we will test the EMA, but when? If I sell here and this price keeps going up and up and up, that means I'm losing. I sold here, okay, or I sold here, and EMA goes up, okay, so by the time EMA goes up here and I sold here, price goes, and then finally tests the EMA and goes up, I have the right to say EMA tested after a certain amount of bars, but I also lost a lot. I lost this, or even more. So we know at some point we're going to get to the EMA, but here is the problem. I said bulls are trying to reach 76.50. Okay, it's about 9 points away. It's not that far away. And if they're going to sell now, they have to close bar 31 bearish. So you have 2-bar continuation, might look for a quick leg down to the EMA. There's a breakout point, kind of a support. EMA is right there, so we might come down. But I don't know. Right here, limit order buyers. Right there, limit order buyers. So all I know is that the bears are giving a fight to make that 5-point initial scalp. They want the swing. They want more than that. They want 20 point and move under the EMA with a surprise bar. I don't see it. So all I can expect and anticipate, are they going to be able to make their 5-point in this small pullback bull trend, which the pullbacks are being bought even if they are strong bear bars. Like 14, like 18, like 21, maybe like 30, I don't know. But I would anticipate a pullback. It's just that, you know, everybody wants to sell and make money because it's easier to sell, you know, when price is going down. I guess there's a gravity here. It goes faster. It's easier to make money. I think that's just the Placido effect. Is that what it's called? But who knows? It might be. And I would say that I would end up making more, you know, faster money than, you know, faster points selling than buying. So we're trying to test 52, 38, 52. We still made a full 5 points there. We still didn't make one. right there. That's not enough. Needs to come down here. 38.52 we can pull down to and still keep the gap open. But if we do breach below 52, we're coming down to 38.47 possibly. Now, why is that? Well, let's talk about it. Spike, pullback, and channel, right? It's also 1 pullback, 2 pullback, maybe, well, this is still high, so 3 pullback and 4 pullback. So it could be an exhaustion possibly. So not only we could get to the 52, but we can also get down to 47. So somewhere here, we could come down and test if bears push. So the first is 5 point. So leg 1, micro double bottom, 31 and 32. That's a pullback. Bears want another leg 2 to finish the counter trend. From the highs, if you're counting, that's the first entry short. With the pullback, we might get a second entry short. But these bears could not even make a 5 point yet. So you see, you get my thinking here. Why we're not able to get a 5 point, we're not able to close the gap, because bulls are still trying to keep the gap open, maybe all the way to the bar 40 or 50. This is where L would say I would wait for a second entry short if they give me one. And that could happen with a pullback. So bar 32 is your pullback. So we might actually sell into 52 and then further down, possibly 51, maybe 51.25, 51.50. But first this bar has to close. Now 2 bars, 2 bear bars. It's good, but it's not that strong. 3 bear bars would have been a really nice thing to have. So what just happened there? I think bears are going to try again anyway, selling, but that's a problem. See, this is what I was worried about. We're in a bull trend, trying to sell something that is struggling already. All right, so now could this be just a rescue attempt to get these stuck? Some bulls are stuck here, okay, and they might be trying to get out. But here's my problem. Do you see a breakout, solid breakout from the low of 26? No. I don't see it, do you? So some bulls, some bears are trapped there. Here, if you measure the outside bar, do you see a bear breakout body closing below 26? No. 31 failed. Bears trapped. And bulls bought it because bulls were all kind of pissed off, okay, that they could not get to this shallow target when they bought here. All they were able to do was, I don't know what they make there. So let's see, if they bought here, 59.75, 60.75, they couldn't even get a 60.75. So they're all kind of trapped up here, and they're upset. So now they could be buying into this trap to get their, break even. And they might have gotten it. I don't know. Looks like it. You see that upper wick? That could be break even. Now they might try to sell, but they're going to have to close bear bars down here yet again, and then try to test the lows and get out. But you have an outside up bar now. That outside up bar is a problem for bears, especially if the bar 33 closes on its high as a bull body. We have a small trading range now. And these bears might be still looking for some kind of a leg down, but bar 32 closed on its high, and many bulls got stuck here and couldn't get their 1 point, already broke even. They might be looking for continuation, but this is now a limit order market. So you're going to have to look to see 2 consecutive bull bars closing above here in order to get back up here and then break out again. If this bar now closes down here, then the bears are going to be like, okay, we need a second leg down and finish this job that we failed to do at the low of bar 26, which they were trapped. So now they're trying to get out. So if you're in a limit order market, what are you going to do? You're going to sell anything that closes bullish enough, such as 32. Or you're going to sell up here again. I don't know. This is tough. This is hard to trade here. This is everybody trapping each other here. Bulls trap bears, and bears trying to maybe trap bulls. I don't know. But this is still bullish market in a limit order at the moment. But it's still a small pullback bull trend. Why? You only have 2 bars, 30 and 31. And I warned you that 30 could be just like 14, just like 18, just like 21. I said, hint, hint, it's still a small pullback bull trend. Pullbacks are either 1 or 2 bear bars. There it is, 2 bear bars. Some bears try to sell bar 32 close, because it's a limit order market. 1, 2, 3, 4. Some bars are overlapped, but not many bars. So they couldn't make enough money. So some bulls are now buying that in hopes of closing a bull bar above 26 high, get to the shallow target and finish this breakout, and then continue up to these levels, and then maybe start the descent. And that's when I said, watch out all the way to bar, 32, 35, maybe even 40. We may not still touch this EMA. Now, how do I know this? This is actually a quote from Al Brooks. He always says, how do I know this? He's hinting you that he has studied these charts. He see this, regularity on almost every time when you have a, trend from the open. Market wants to have new highs. So it's going to do everything in its power to keep the gap to EMA open. And that touch to EMA or test to EMA may not come in all the way until 40 or 50, bar 50. So when I heard these things, I made notes of them. And then I would go back and I would look at charts and find, price action resembled this open and this kind of, price action. And I would look at the bar numbers. Then I would say, okay, this meets the criteria of what he was talking about. I should be patient and not just sell hastily because it may not sell. This is why people lose their accounts, because they sell this and then price goes all the way, like doubles it, and prices up here, they're still down here. It may never come down there all the way to the end of the day. And by then, if your account is $5,000, you're already blown it up probably. It's done because you're selling here, still not making. Selling here, still not making. Selling here, still not making. Now you have like 4 or 3 contracts and it's kept, quadrupling your losses. Just don't do it. It's going up. Just take the loss, reverse it, and buy instead. And there's that. I mean, look what just, Molly Bar just posted. Price don't have to come down to EMA. And yeah, I mean, Remember that time when the EMA never got hit all the way at the end, like after the bell rang, and then it came down like after the fact the market was closed, like literally right before 5 p.m. or something, before the maintenance hour rolled in. That's when everyone was gone by then. Everybody's like, okay, if you haven't taken your loss, after 4:45 p.m. Eastern time, Ninja will close your account, close your trade, and they're gonna slap you with a $50. Now, how do I know this? And yeah, because I've seen it happen. So we're still bullish. We're still going towards these targets. So unless I see a second entry short, so maybe a first entry short, if the bears give me a second entry short, that's great. But until then, you just don't sell. The magnets, let's see. That's a measured move target right there that they're trying to reach. 38.7650, I'd say they're trying to reach. Bulls are trying to accelerate maybe up here. I don't know if they're going to be able to accelerate. But yeah, this daily trend line is target. So they're buying and buying, scalping, buying, scalping. So I'm also looking at gaps. So there's a gap from that to that, I'd say, some kind. But it really is not, almost not there. It's just grinding its way up. So it's good for the bulls. Okay, I have to get going, guys. I just try to stay a little longer, but I do have to need to go. All right, so I'll be back in a couple of hours, most likely sometime around, if it's not 2:30, definitely around 3 o'clock. And then I'll start posting again. Stay safe. So what could happen? Well, we are keeping this gap open, trying to get to some levels. They're still pushing, good for the bulls. Now look for exhaustion bars, like look for strong bull bars, okay? Like that, the bars has to be bigger than the bar 20. Bar 20 is the biggest bull body in this channel, okay? So I don't have a bigger bar. So unless you see one, you can't really call this any exhaustion. This can still go on and on and on. They're trying to reach here, okay? Now, around bar 40 to 50, I think we might try to descend to the EMA, but I don't see a reason. They're just buying every pullback. All right, I'm going to sign off now. You guys have a great day. I will see you tomorrow. And then Thursday is Tom Hugard. And on Friday, I'll be back. Bye, everyone. We're just about to get to the measured move target.